Dramatic intro? Check. Savage thumbnail? Check. Without further ado, let's get into the top 3 ETFs that are gonna make your financial portfolio absolutely bulletproof. Roll the footage. First things first, I should probably explain what an ETF is. If you didn't watch my previous video, an ETF is pretty much an exchange trade fund, which means it's accumulation of multiple stocks grouped into one general stock that you can purchase in bulk. So a good comparison would be like if you're shopping at Sam's Club, they just sell everything in bulk. You could get like a variety pack of a bunch of chips and you pay one price and you get a little bit of all of them. Now the benefits of this is usually you buy like a sector or something, and then that sector contains several companies from like ranging from tech to like housing to like finance to anything. And that way, if one company in that sector were to fail, say it's a tech sector, say Apple were to fail or something, it wouldn't matter. You wouldn't lose that much money in the long run because the rest of them would be carrying it out of the bucket. That ETF has other companies like Microsoft, Amazon, and other big heavy hitters like that would just drag the ETF price up regardless. So you have nothing to worry about, and that's why they're so secure, and that's why I really trust them. So let's get into the first one then. The first one, and probably my favorite one of all time, is the VOO. This is Vanguard's version of the S&P 500. The S&P 500 is literally just a collection of the top 500 companies in America. So it ranges anywhere from technology to energy to industrials and everything in between. So the Vanguard S&P 500 is literally accumulation of all of them. So some companies you're required to get certain requirements just to get into the S&P 500. For example, Tesla's currently trying to get in. The top like 10 holdings in this company currently are Microsoft, Apple, Amazon, Facebook, Johnson & Johnson, Berkshire Hathaway, I can't pronounce that one, Visa, Procter & Gamble, and then United Health Incorporated. So those 10 companies make up a majority of it, about 28% of the entire ETF. But in comparison, there are another couple 490 companies that make this up as well. So if one of them were to ever go under, you have nothing to worry about because the rest will always keep it pushing up toward in a positive trend. So this is why I have a good $10,000 invested in this company. And when the whole crash happened earlier this year, I started investing, and up until now, I made about 30% increase. Of course, yeah, that was nice. So, and these are predicted to go further and further up. The thing is, though, I wouldn't be waiting to buy on a dip or anything. I would just buy now because historically it's been shown that like people who try to time a dip end up losing out on a lot of money, and much safer to just invest as you go and build your portfolio as you go. So if you have extra money laying around, definitely throw some into this one because it's relatively safe. You're banking on like 500 companies failing, and the chances of that are literally impossible. You're pretty much banking on the entire US market to fail, and that's just not going to happen. So if you want a safe investment, this one has always shown to give you returns. The next ETF, and this is probably my favorite one, is the QQQ. Now, this is primarily the tech sector, and as you guys all know, we live in 2020. Like, this is the tech revolution. Tech's at its peak, and I highly doubt we're ever going to take a step back and like stray away from tech. So I'm assuming, naturally, that this is probably going to be the most popular ETF in the upcoming future and probably forever going forward. So this ETF is primarily comprised about 50% of it's made out of IT companies. Then we have some telecommunication services, consumer directories, healthcare, consumer staples, and then industrials. So that's essentially what makes up this ETF. And in this ETF, you'll find companies like Apple, Microsoft, Amazon, Google. Google is shown there twice because essentially it's made up of two separate companies. So without getting too complicated, that's essentially why you see it twice. Intel, Cisco, Comcast, and then oddly enough, Pepsi. So it's a mixture of primarily tech companies that make up the bulk of the ETF. So once again, if one goes under for some reason, Apple CEO does something crazy tomorrow and then just falls apart and they just go under, you're still sitting pretty. You don't have much to worry about because I'm sure that Microsoft and Amazon aren't gonna collapse all in one day as well. So this is why I highly support this one. More and more tech companies are trying to push their way into this one because it's huge. And if you have like a big foot in like the market in the tech sector, you'll find your way in here. And I'm assuming like this one's gonna stick around for a while because like, can you really see Microsoft or Apple collapsing like tomorrow or in a year or in a decade even. Like, let's be real, they just keep acquiring more and more companies. So this one's here to stay for a while. This one as well, I have around $10,000 in, and I've seen a significant increase since COVID, because obviously we've moved into a more online world. So thanks to that, you can use all these software services to get to talk to your friends, to go out, to meet people, to socialize, and then keep in touch with your company members as well. So for that reason, I highly suggest, like, even a beginner in investing, like, invest in this company, because it's very, very safe. Like, there's not much bad that can happen. Even if a company does go under for whatever reason, a lawsuit, whatever, like, you're still sitting pretty. Like, all these companies are multi-billion, some of them even trillion. Like, Apple and Google are trillion-dollar companies. So the chances of these going under, slim to none. So I think it's another very safe investment. And finally, last but not least, we have VT. Now, this is one that I personally don't have any holdings in right now, because I just recently started learning more about it. It's Vanguard's Total World. So this is essentially a sector that has everything in it. Companies from all over the world, and big brand companies as well. And this sector spread out on just about everything. They have basic materials, consumer goods, consumer services, consumer clinics, consumer defenses, energy, financial services, healthcare, and industries, real estate, technology, and utilities. So it's very, very spread out amongst many, many companies. So for this sector to fail, you're pretty much banking on the entire world to fail. And honestly, it's possible. And if that were to happen, your money's going to be the least of your worries. So at that point, if the world were to collapse, money's going to be irrelevant anyway. So who cares at that point? So this is one of the ones that is extremely, extremely stable. There's not as much return as the other ones, but once again, it is just so safe that, like, it wouldn't make sense to have, like, a large sum of money in here, because let's be real, if you're keeping your money in the bank account, it's not growing. And this, at least, it's growing. It might be growing slowly, but at least it's gonna be steady. So you're gonna have returns. And then when you look at it, of course, America makes up a bulk of, like, the percentage of this ETF, but let's be real, they have Latin America, the United Kingdom, companies even in Africa, Canada, Eurozone, Japan. They range all over the world. So once again, like, if, God forbid, somehow America was just to fall apart and, like, all these companies for some reason just disappeared overnight, at least you got the rest of the world to count on. So, like, it's a very safe, like, very low risk ETF. And it's essentially guaranteeing you returns for the rest of your life. In conclusion, I do plan on buying some holdings in VT, because, again, it's so safe that it'd just be stupid not to. Several people told me in my previous video that I should mention that I am not a financial advisor. That is indeed true. I am not a financial advisor. I'm just learning as I go, and this is something I've been picking up really heavily, so I decided to share some of my knowledge. I highly, highly suggest you guys open up a brokerage. If you don't already have one, either reference my last video, I'll put a link somewhere up there or down somewhere, and then just go through that. I explain key terms and how to use a brokerage, where to find things, what certain numbers mean, what defines a good stock or a good ETF versus a bad one or a non-promising one. So just catch yourself up on that. I'm going to have some links in the bio for, like, an E-Trade or something, because I use that as my brokerage. So if you want to follow along, use that. Again, it doesn't matter. It's all UI and UX. Like, if you like Robinhood or Webull more, be my guest, sign up for them. I don't really care. I'm not sponsored by any of them, so I could care less. But yeah, if you really want to secure your financial future, definitely start investing now, because when you keep your money in your bank account, all it does is just devalue it, because with inflation coming on, the interest you're making from your bank, you're essentially losing money. So if you want to protect yourself and make sure that you're constantly growing in an upward direction, start investing. And ETFs are significantly safer than stocks. Like, yes, some stocks like Apple, Microsoft, I'm sure they're very safe, and I'm sure they're going to keep going through the roof, and I'm sure they're going to keep going for the rest of our existence, but they're always one stupid CEO mistake away from falling apart, one bad PR mistake away from falling apart or getting sued, or, like, people just wanting to quit and stuff. And you know how it is, like, trends change all the time, so some of these companies just might be out of fashion eventually. So just keep that in mind. That's why I always advertise, like, ETFs, and, like, tell all my friends that, like, this is the way to go. It's just so much safer. You have a cushion to fall back on. They don't change overnight. Even during crashes like this one earlier in 2020, like, we were still relatively safe. Like, yes, most of them went down 30%, but they're not gonna go down zero. What, you think all these companies are just gonna crash? No shot. So again, if you like this content, please give me a like, give me a sub, give me a follow, do something, comment in the comments section. I don't care. Just support the channel. Let's keep this content rolling. I'm having fun doing it. Whatever. Hope you're enjoying it. Let's get rich.